This market is just out of its mind, okay? SoFi announced that they did a full acquisition of Technisys' digital banking platform. The stock on this news actually dropped by 13.7%, going from $11.39 a share all the way down to $9, okay? $9.83 for SoFi stock. Technisys is a digital banking platform that is cloud-based, okay? That allows you to put multiple financial services all on a single platform. Its technology also allows other banks to actually process and analyze data in real time and then allow to push out new digital products very quickly. SoFi then came out and said that they are going to be putting their own products onto Technisys' platform, which supposedly between 2023 and 2025 is going to save them around $80 million, and then an additional $70 million annually every year thereafter. But because Technisys is its own standalone business, they're expecting to actually bring in an annualized about $500 to $800 million of new revenue just from this new side of this business, which, if you know anything about SoFi, is going to mesh really, really well with Galileo, which is already selling to other banks and other enterprise clients their digital banking cards. That's how, Robinhood or Chime or all these different companies are able to have Visa debit cards. But now we're actually going to have the Technisys platform as well to add a whole bunch of different assortments of newer products as well. Now let's get to the juicy part, okay? The reason why the stock drops 13.7%, and that's the fact that they diluted shares by 10%, or roughly 10%. It's actually about 9.9%. But still, that's a lot of, 84 million shares that they gave away at a price target of around $12.58. Shareholders don't like that, right? Because then their shares are worth 10% less. So obviously you could potentially see the stock drop anywhere between 0 and 10% because that's what the actual dilution is saying. Without any new revenue, without any new cost savings, without any new, technological advances or membership offerings or anything like that, yet it dropped even more than 10%. Meaning that what people are saying, what investors are saying, is that this acquisition is actually bad for SoFi. That's what the market is telling us, even though it completely fits in with what they're doing. And you know what? I think that since they've gotten their bank charter, it's made Galileo even better. And now this is going to even benefit off the 89 million accounts that Technisys didn't have access to. I think it goes to benefit Galileo, it goes to benefit SoFi Technologies, and it goes to benefit Technisys, and all of them are owned by SoFi Incorporated, the stock that we're all buying. But we really have to ask ourselves two main questions. Did we get a good deal on this new company, or are we getting, kind of ripped off? And secondly, why would we dilute shares when we have good, cold, hard cash that's not at all-time lows right now that we could have used instead of diluting shareholders? So let's break it down really quickly. If we're going to have to pay $1.1 billion, and by the end of 2025, we're going to see around $500 million to $800 million of new revenue. Now, if we break that down by yearly revenue, okay, between those 3.75 years, what we see is around $133 million or $213 million, which leads to a future price to sales ratio of about 8.25 times to 5.16 times. To put that into perspective, SoFi stock right now has a price to sales ratio of about 10.5 times. So we're actually giving away a way more expensive stock in terms of valuation to a, much less stock right now, and buying out the full company as a full acquisition, which you usually have to spend way more to get a hold of. Now, obviously, the growth rates are different, so, the price to sales ratio might be higher for a reason, but still, this might be a great buy. And the $500 to $800 million, whenever it comes to making a good deal, you're not going to tell the people that you're buying the deal off of how juicy the numbers really are. So I think it'll actually come to fruition to see what the actual cross-selling between Galileo, between SoFi Bank, between Technisys is really going to be. But overall, if it's going to add new customer satisfactions and make SoFi the big brand name whenever it comes to neo or digital banks, that it is just set in stone that we had to make this acquisition. And regardless if you think that this was a smart decision to dilute 10% shares, what I think is an absolutely abysmal, terrible idea is to actually bring the stock down by 13.7%. You're saying that owning Technisys is actually going to bring down the company 3.7%. That's what the market overall is saying. I think there's a great idea for me to buy the dip here, and so anything under $10, I'm going to be aggressively putting some money into as I can get new capital. And personally, for me, the short-term decreases in the value of this investment mean nothing because I practically want to retire with this stock. Now, if you're also looking for a company like SoFi to retire with, it might be good to check out how many shares you might need to actually do so. But until next time, guys, if you could, make sure you guys give me a like and subscribe down below if you want to see more financial content just like this.